So you don't have to worry about that. So I think we have enough time to, so because we have 2 more lectures on this chapter, so we should have enough time. Okay. So let me okay. Okay. So so again, let me start from the beginning. Sorry about that. So okay, so we have 3 spreadsheets. Okay, so this is a balance sheet spreadsheet. Okay, again, these are those are debit column and credit column already filled out. Okay, just assume we haven't filled out yet. Okay, so then we're gonna work on those one by one. Okay, so so this is the spreadsheet. Um, you guys can hear me, right? You okay, right?
Yes, sir.
Yes, it's better now.
Okay. That's okay. Thank you. Okay, so this is the first spreadsheet. It's called the balance sheet spreadsheet. Okay, and our second spreadsheet is the income statement spreadsheet. Okay. So again, we already fill out. Okay, let's just assume these are not there. Okay, so just assume those are not there yet. Okay, so we're gonna fill out one by one, and then when we fill out the income statement and the balance sheet spreadsheets, some item gonna be related to our cash flow, right? Either cash inflow, cash outflow. So we're gonna fill out the cash flow spreadsheets. If it's cash inflow, we debit it, right? If it's cash outflow, we credit. Okay, so and we're already done with those. Okay, but it's just assume we don't have those numbers. Okay, then let's work on those one by one. Okay, so we're gonna start with the income statements. Okay, so we're gonna do item by item. So here you can see those are item number. Okay, so we're gonna start with the first item, right? The second item, third item, then number 4, number 5, etc. Okay, and then once we're done with the income statement, then we go to the balance sheets. Then we try to fill out those in the balance sheet. Okay, so one by one. So again, the first item, okay, we're going to fill out is the sales revenue. Okay, so look at sales revenue here, right? This is sales revenue. Okay, so revenue we always credit, right? So we credit revenue. That's why we have this credit revenue for 100. And then this is the item number 1. Okay, and then related to revenue, we have a cash receipts from customers, right? So we sold merchandise for customer make payments, we have cash inflow. Okay, so related to that cash inflow, you also have what accounts receivable related. Okay, that's why we're gonna go to the balance sheet statements, right? So balance sheet spreadsheets. Want to look at these accounts receivables, right? Accounts receivable was 30s, now it's 32. Okay, so increased by 2, right? Assets increased by 2. That's why we debit 2. Okay, debit 2. And this is item number 1. Okay, again, these are related, right? So we debit 2. So if I run it down here, we debit accounts receivable for 2, and we credit sales revenue for 100, and the cash should be debited for 98, right? So that's how we get figured out this 98. And then we can see we have cash inflow, right? Cash receipts from customers. Cash receipts from customer belong to the operating activities, right? So that's called cash inflow from customers. Then we have this debit 98. Summary journal, and again, this is the item number 1, right? You can see we put the item number 1. Okay, so the 3 are related. Okay, if you put, we put in the 3 different spreadsheets, but if you put it again, we just put the summary journal in these 3 different spreadsheets, okay, separately. But you already see, right? Those are debit, credit. Okay, so we can put it together. Then that will be the summary journals. Okay, it is summary journal. That's called the summary journal approach. Everyone's clear with item number 1? Any question now? Any question?
No.
Not this
we good.
Work on the item number 2. Okay. So okay, thank you. So let's work on. Hello, you with me, right?
Yes.
Now let's work on item number 2. Okay, so we're done with number 1, right? Let's work on number 2. Number 2 here is called investment revenue. Okay, so what is investment revenue? Investment revenue are those, let's say we invest another company's stock, right? When that company issue dividends, we're going to receive dividends, right? We call it dividends in revenues, right? Dividend revenue. So that could be the investment revenue. Okay, so we receive those dividends, we recognize cash, right? So we debit cash, we credit investment revenue or the dividend revenue. Okay, so that's why when we have revenue, we credit. That's right, we credit 3, right? So this is item number 2. Okay, and we're gonna debit the cash, right? So we receive cash. Let's say dividends. Okay, so we receive cash. So this is the cash. We debit cash for 3. And what kind of activity it is? It should be operating, right? It should be operating because this is what? This is the revenue related activities. Okay, so that's why we put it in the under the operating activities. This is cash inflow from investing activity, right? From investing revenue. Okay, investment revenues. Okay, to the cash. Okay, so this is the, if you run it down, again, so we have this, we separate this into 2 spreadsheets, right? If you put together, if you write it down together, it's going to be like this. We debit cash, we know how much, right? But we already know we credit the investment, the investment revenue for 3, right? So that's why this one has to be 3. Okay, so which is here, right? We put it down here. It's 3. That was item number 2. The clear one, item number 2. Okay, so then item number 3. Item number 3. This is related to additional information A. Okay, so I need to let me go to the additional information number 2. Okay. Okay, so this is additional information. Okay. This is additional information. Okay, of these questions. Actually, this is the page is this the whole questions, right? So you can see here on the top, this is the balance sheets, right? You have balance sheets. Okay, everything on the top. Okay, everything on the top. These are the balance sheets. Okay, and then we have, these are the income statements, right? These are income statements. And then we have additional information. Okay, so we need this information, okay, to prepare cash flow statements. Okay, so additional information A is that a portion of company land, okay, purchased in the previous years for 10 minutes was sold for 18 minutes. Okay, you can see that information, right? The land was previously purchased for 10 minutes. Now it's sold for 18 minutes. Okay, so if you imagine this is what this, you have a cash receipt, right? You receive cash from the sales, right? You receive cash from the sales. Okay, so this is your land you purchased, then you sold, you receive cash. This is what kind of activity it is. This is operating. Not really, right? Operating on revenue expense related. This is not revenue expense. How about the investing? This is the investing. Is that correct?
Yes.
We have internal investing, external investing. This is the situation we invest in our own. So now we sold, we have cash inflow. Okay, so if you look at this situation, the journal should be what? If you write a summary journal, the cost was 10. Now we sold it, so we should credit land for 10. Okay, and then we sold for 18 millions. We should debit cash for 18, and then we have a gain on sales for 8. This is the summary journal. Everyone's clear about that? About this, right? This should be the journal. Okay, yes. So now we're gonna fill out. Okay, we're gonna fill out this journal. Now I'm gonna go back. Okay, so everyone's okay right now, right? So remember that journals. Okay, the summary journal. So we're gonna go back to points. Okay, I'm gonna go back to PowerPoints. See here the gain, right? Okay, and then we need to credit land for 10. See the credit land for 10. This is item number 3. Okay, so we credit land for 10, and then we should debit cash for 18. Right? Debit cash for 18. This is the third spreadsheet. Remember, this is the investing activities, right? We should put it here under the investing, the sales of land. We debit 18. This is the item number 3. Okay, so that is a summary journal. You can see again, summary journal. You know, in the spreadsheet method, we put it in a spreadsheet. Okay, so we separately summary journal, and this is how we figure out the cash flow. Right? So this is the cash inflow. This is in the investing activities. Everyone's clear about the third item. So we're done with the first 3, and now let's work on the expenses, right? So let's work on cost of goods sold. Okay, cost of goods sold. We already practiced, right? Cost of goods sold are related to what? Cash inflow from supplier. What's that? You guys okay, right? Okay. So we're talking about this cost of goods sold, right? Are those related to the cash inflow from cash payments, right? Cash payment to suppliers. Okay. So what are those related? Inventory related, right? Okay. And accounts payable related to this. Okay. So then we put it together. Okay. So cost of goods sold, we should what? We should debit, right? So we should debit cost. This is the expense. We should debit. Okay. This is item number 4. And then we have inventory. Inventory is in the balance sheet, right? Inventory was 50. Now is 46. Inventory decreased by 4. Inventory is one of the assets. It decreased. That's where we go credit, right? We credit 4. Okay. Let me write it down. Okay. So probably it's better to see it visually, right? So if we put those together, so we have inventory. So we have this. The cost of goods sold was what? Was 60, right? Cost of goods sold was 60. Okay. You debit 60 to cost of goods sold. We have inventories. You credit, right? Because why you credit? Because inventory decreased by 4, right? You credit by 4. And then another item related, this is item number 4. Another item related to accounts payable, right? Which is accounts payable was 20, now become 26. Liability increased by 6, we go credit, right? So we credit accounts payable for 6. Okay. So that clear one. And then the last item gonna be cash, right? Remember, this is the cash payment to suppliers. Okay. So how much this is gonna be? Okay. This has to be 50, right? So this is the cash payments to suppliers. It's expenses related activity. That should be the operating activity, right? That should be operating. Okay. That's why we'll put it here. Under the operating activity, this is this, right? Cash outflow to suppliers. We credit 50. This is item number 4. Okay. The clear one. Item number 4.
Yes, sir. Yes.
Okay. Let's go item number 5. Okay. And item number 5 is what? It's a salary expenses, right? Salary expenses. Okay. So salary expenses, then related cash flow item gonna be cash payment to employees, right? Cash payment to employees. And then we may have a salary payable unrelated. Okay. So those are 3 related accounts. So then what we're going to do with the salary expense? We're always going to debit, right? That's why we debit 13 to salary expense. Okay. And then we're going to go to the balance sheet spreadsheet. You want to look at the salary payable. You can see the salary payable. Salary payable was 1, now becomes 3. So salary payable increased by 2. So liability increase, we should credit, right? So let me write it down. We should debit salary expense from the previous one. Salary expense 13, okay? And the salary payable, because it's increased by 2, we should credit 2, right? Liability increase, that's why we credit 2. And then the cash payments to the employee should be what? 11, right? The balance. Okay. So we fill out this the balance sheet spreadsheet already. Then this is the income statement already, right? So now we should what? We should go to the cash flow spreadsheet, right? This is the cash payment to employee, which is expensive related activity. This is the operating activity. Okay. And then we already figured out we need to credit 11, right? Credit 11. Okay. So that's item number 5. Okay. Let me just finish one more. Okay. So depreciation. Oh, sorry. I need to. Okay. Yeah. I also forgot that the quiz. Okay. Let's stop that here. Okay. Let's go to the canvas to submit the quiz. Okay. Let's work on the quiz right now, and we're going to continue on this.